The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Got to lubricate that throat there. And my pleasure to be here Monday through Friday, market days at 11 o'clock till noon Eastern Time at 877-927-6648. Great shows this morning already. 2 hours, and we're on the way with Steve Rhodes. First hour kicking us off here at TFNN. Then you get Tom O'Brien and Dave White joining us at the second hour. Great show is there that I heard snippets of, but I did see a number of charts. Actually, I'm going to go through some of those charts in a short while. I'm not sure what was said at that particular time because I was busy, but I did see the names, so we'll look at them together. And now you've got my show, the Tiger Technicians Hour. Before I do anything else, I do advise, because this is such a perfect time for it, I'm going to be doing on Thursday night, this coming Thursday night, a webinar on the MACD and the slow stochastic. How important are these two technical tools in my work? Let me show you. The moment that the E-minis crossed positive in the slow stochastic back on the 10th of February, that low that was recorded on the 3rd, as 1725 at 0.50, this is the June contract, E-mini future, started a buy signal that went to a buy mode when the MACD crossed positive on the 11th. And you can see that that green line, that fast-moving average, now it doesn't always do that, it does something different sometimes, showed you that you could hold the price because this moving average essentially mimics the price. Look, you see that price? You see that little nick there, the little kind of pullback? That was your peak C. And the peak C was the deepest pullback you had from that opening salvo right down on the back on the 3rd of February. And then what happens? It continues high, and then it crosses negatively yesterday. So even if on a worst-case basis, if you were just in using that just that one particular index, you could have been in until the E-minis broke under the 9-period exponential moving average yesterday. And let's say that would be at about 1853. Not a bad gain. Now, look at this. The slow stochastic held. I'm going to explain why many people get confused when they see what they call overbought in the slow stochastic, two moving averages, exponential moving averages, and how I, over the years, have learned how to interpret it to be able to say, don't underestimate the power of being over a certain percentage, because over that percentage means it is positive. That's what, believe me, when I say that's what you want to see in a bullish mode. Now, remember, my work in the Chapman wave methodology, the umbrella of that term, takes in many, many aspects, and one of those is that there's a specific designation that goes from a buy signal to a buy mode. The buy mode, when the conditions are met, implies that you should go to at least 4 higher peaks from the left side low bar, that most obvious low bar, let's call it the most obvious low bar for now, and that should take you to at least a D, whereby other things come into become factored in. When it's the other way around, the sell signal to sell mode can be triggered. Now, let me just show you something here. I haven't updated this. Here's the 5-minute chart. You remember, we've been looking at this for about 2 weeks now. When you go to the low of 1832.25 on the 14th in the 5-minute E-minis, look, I'm just merely counting each successively higher peak, and it goes A to B to C to D. And look what happened. The fast-moving average never crossed negative, even though it was wiggling around. Now, the slow stochastic did other things, so you've got to learn how to interpret these waves. Now I can put a down arrow because the E-mini went crossed negative in the MACD, went under the 9-period exponential moving average, and the slow stochastic failed at that peak D to confirm it had a much lower high bar. Those are the things I'm going to be teaching in this course. Now, what is this webinar all about? It is about the MACD and the slow stochastic, number one. Number two, it is about something that is just, to me, it's a gift. I've never given this gift before. It is 1 month free of my opening call. Usually it's a 2-week trial subscription, but this will be a 1 month. At this particular point, if people have signed up already, if they signed up in time, they've already got some. Even yesterday, we had some fantastic moves. We shorted the IBB within 15 cents of the exact high, and it plunged. And the volatility index, we grabbed it at the exact low, 7.22. That was the low, even though it was higher earlier on. And I said to buy it, we bought it at 23, 7.23. 22 was the low. And it soared. It went over 8. And we've taken profits, very short-term profits in that particular trading position. So I can't promise that that's the way it's going to be, that your trades are going to pay for it in a day or two. But believe me, I will teach you, because I'll be going through these waveforms. I'll be teaching you the count, the wave count. I'll be teaching you how to use these different indexes. I think I got an email in a moment. I'll try to check it out. But let's go first to, let me, wait. The Dow's down 30 at 16,078. The S&P's down 379 at 1842. The comp index is down 15 at 42.45. Gold is up again, up 13 at 13.85. Silver's up 43 cents at 21.63. High-grade copper is hanging around the $3 area. Crude oil is up a tad. Bonds are only up a half a point at 133.24. Dollar's down 25 cents. And as long as gold's moving up, I just don't think that the dollar can do much of anything. And the euro is up a tad. Let's go to Nahid in Safety Harbor. Nahid, how are you?
Wonderful. How are you doing, Basil?
I'm very good, thank you.
Thank you for taking my call. I'd like to look at Yahoo and see if it's ready to be shortened or...
Okay, here we go. Yahoo, YHOO, has in the month. Oh, wait a minute. Let me move that away. Yahoo has gone to a peak E in the monthly chart. Yahoo search engine YHOO down 50 cents at 36.73. Now, in the weekly chart, I have a very unusual peak G. Now, I say unusual, but this is particular in my CD introducing the Chapman wave methodology. I talk about. Let me just see if I can put that on right now. I talk about the smooth peak G. It's a special technique that I developed over the years, that a peak F could be a very serious pullback, but if it squeaks to a G within 3 sessions, I call it the smooth peak G. Why? Because if you're not looking very closely, it would look like as if the peak F is still continuing, and that's kind of what happened here. Peak F was at 41.01. Next day, the high is 40.58, just a little bit low. And then the following day, it goes to 41.72, and then it starts to take on water, and it pulls back sharply to the 34.45 level, has had a retracement to a leg B, probably a peak B today. I'm almost certain it'll be. I'm going to say it's a peak B. There's no way that it's going above 40 today. It's at 36.70, so it's a peak B, and that portends, based on the weak MACD and the weak stochastic, that it could in fact turn into an H pattern, the lowercase h pattern. So that's number one. Number two, the daily. Now, I don't know how many times, even in the last week, we've looked at so many peak Ds and E's that have made tops. Well, this Yahoo started off at 31.70 on the 28th of October, went to a peak D, instant restart in the Chapman wave. That's in my CD, introducing the Chapman wave instant restart. That is, I believe it is chapter 19, somewhere around 340 or 346 or something like that. Great detail. What happens within 3 bars to give you the instant restart, and lo and behold, it does. Now, an instant restart very often can go to a D or even an E. And that's exactly what it does. It goes to the peak D on the 26th of December at 41.05, opens with the round number 41, and that's where the MACD and the stochastic start to pull back sharply. Then it has what I call a rogue wave. The rogue wave, another chapter in my book. The rogue wave is, let me find, I think it's chapter 11A, slide 268. Yep, I just saw that. And there it says that one of the technicals is kind of okay, but there's no veracity. There's no support at all. And what happens? It goes to 41.72 on the 8th of January. Then it starts to pull back. And what does it do? It goes down to that 34.45 level. Then it starts a brand new A, B, peak C. And the other day it makes a D with a silent doji on the 6th of March. And it goes from 40.15 down to the low of today, which is 36.45. Everything about this chart says that if Yahoo takes out 36.20 to 36, there's a real good chance it's going to test the low of 34.45. But I can just tell you this, that if it continues down, that 34 area is the 9-period exponential moving average in the monthly chart. It is the 33.49 is the 200-period moving average in the daily. So I'm looking at this and I'm saying, at minimum, I think Yahoo's going to test the 34.66 to 34.45 area. So it's 2 points. It's about 8%. I would suggest two positions. One is you could short it now, but my Chapman wave trend gauge, and I'll talk. I think I had an email on that a little earlier. Suggests that there's going to be a pretty sharp rally in the futures, and that would affect the. We might have seen it already today because it was up over 9 points from the low, 8 points in the futures. But that could affect the. It could be Sunday night or Monday, some news or whatever it is. So I'm going to make a suggestion. Shorting it here because it has gone underneath the 36.48 low of the 12th just 3 days ago tells me that there's a good chance that even if it pops up, it's going to come back down again. But the best opportunity for shorting would be to have a little patience. One is you could start a very small short position right here at 36.65 saying this is part of a two-position trade. A little nibble here because I want to be in if it suddenly the market just tanks later on, or Sunday night there isn't good news. In fact, it's the exact opposite. And you want to be there for Monday if it goes down sharply. But it has to be a small position because your risk reward in the daily and the 120-minute chart. Let me just do this quickly. 1, 2. Okay, this is the 120-minute chart. Peak A, peak B, peak C, peak D, E, and there's the F, okay? D was a sharp pullback, but it didn't go under the, MACD did not cross negatively, and that's it. Okay, now we've got trough A, trough B, C, D, E, and F. It's getting real close to at least a rally attempt, so that's why I'm saying either nibble on a short right now, but the real short position would be closer to 37.60 to 37.85 with a stop just a penny above the 38.42 high of yesterday. So that's the way I'd be looking at Yahoo, Nahid.
Thank you.
So I hope that helps you.
Yes, it did. Thank you so much. I really appreciate it.
Thank you very much for calling. Always appreciate it. We'll be back with Louis Nash here right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. The Dow's now down 49. S&P's 590. See, this is bear market material. We've spoken about this so often. I made a real big deal about the 16s for the VIX. Now it's at 1729. That's why we wanted to hold a call position for the VIX. Number one. In my opening call, we are short. This is the most short that I just recollect ever being, or at TFNN, that is. The reason is I've got these monthly charts that are saying, be careful, be careful. These are easy, even an F possibly in UTX. I cannot ignore that. Got a question in the den about Google. Got a couple of questions in email, but I'm going straight to Lou in Nashua. Nashua, hi Lou, how are you? Did you get a lot of snow yesterday?
A little bit, yeah. Too much to handle.
Hopefully we're getting to the end of it, unless you love snow. I'm getting a little tired of that.
I hate it.
Me too. You'd like to look at?
Shorting the S&P E-mini.
Okay, now, are you short already?
No, I wish I were.
Okay, you see, this is really tough. Let me just explain. I'm going to cover 2 questions here. The question is... both in the den, and I've just got an email that's asked the question. Can I find it here? I glanced at it now. Where is it? Question, if I can find it. Gone. It was there. All right, well, the question was a very simple question, and it was about the trend, the short-term trading index, and that kind of covers and it'll fail to cover if, in fact, we've already usurped some of that strength. Now, I use something here that I call, this is what I show my subscribers every day. It shows the 120-minute chart, and in this particular instance, it's a black background. Let me just check to see if you can see it the way I can see it. Let me go to my, I'm running the same thing as most people out there. It's just about to switch over. There it is. Yeah, you can see it nicely. You can see that there was a peak D in the 120-minute chart at 16,505. I'd already drawn in the trend line to the downside. I'd already drawn a left side, right side price time match. And lo and behold, this morning, pop right exactly. We went underneath what I call the Chapman Wave flat base restart. The technique that I discuss, and I go into great detail in my Master Trader series. It's a little complicated because you need to know the instant restart very well to be able to identify it, because it's a variation. So what happened is, now we've accomplished everything. We've gotten to the point on the side. It's the left side low of the left side low was 16,074. And so far, today's low in the Dow is 16,059. So we've gone a little bit under it. So in that sense, it's accomplished. Number two is the volatility index. I was waiting for a leg D in the 120-minute chart. We're in leg D right now. So there are so many signs saying to me that we've kind of accomplished a big chunk, and that if anybody's waiting for another 100-point down day, a lot of things have to happen that are very negative for me to get that. I'm inclined to think that at this point there'll be some kind of support, a kind of a support that it gives you a cushion. Let's just call it a cushion, because a cushion can break. But my short-term trading index gave a signal yesterday, and it's the same signal it gave about 5 days ago. I think it was on Tuesday going into Wednesday, that there should be, from a low bar in the futures, there should be a good surprise 7 to 9 point rally, and that most of the time that transfers into a good 7.9 point rally from the low, not from the previous close, but from the intraday low into the next day. Well, we had that on Wednesday, but it was not a great move. In other words, it wasn't so visual that you saw the S&P trading up 7 or 9 points. It was just from the low it did that, and the Dow didn't even get to more than about a plus 50, maybe a 60, which it should have been more. So it worked, but it didn't work fully. I got the same signal yesterday, and that says that within 2 days we should see a sudden move in the futures of 7 to 9 points. And this morning's low was 1839.50, and we ran to 1853. So you certainly got it in the futures, and it didn't really translate into all that much in the market. Or there was a move from sharply down to quite nicely higher. So now, if we've usurped that, then Sunday night is going to be very important for two reasons. One is, we've got, Luke, can you hold on through the break?
If my battery holds out, yeah.
Oh, if your battery holds out. Okay. I need to go through this so you understand what's involved, because if you hold it through Sunday night, a big thing could happen. I hope your battery lasts. I want to be able to discuss it. So, Lou, if you want, you can call back straight after the break, and you can use 3 minutes for your battery.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we are back, and I'm going to continue with the E-mini. It's a good question, but I think it's a little late. So I just have the question here. Is Lou, you still there? I think Lou's battery failed. All right, Lou, I hope you're listening on TFNN. But I'm going to do this. Because of the risk-reward, to short at 1837, the E-minis, when they've come down from 1880, it's a 43-point decline. In fact, it's much more if you go to the low of the day. I just don't think it's really worth the risk, and I'll explain why. I think most of the selling for the day is done, and now we're just going to be in a kind of a sideways move. You see this big candle here with a long-legged doji, second long-legged doji. It's saying that the body of this candle of 1839 and the low of the candle of 1833, so between 33 and 39, I wouldn't be surprised if we kind of trade in a narrow range, sudden moves. So this is what I call, from now on, this is dartfish session. Just quick moves to the upside, and you think, Lou, are you there? Hi, Lou. So, okay, Lou, let me just go through this. I think it's a little late for risk-reward. Oh, you can get a couple of points, but this is my concern, that the E-mini 120-minute chart is establishing a very nice trading range now, and the 5-minute chart shows exactly it did not go and break the low of the day of 1832.25. In fact, it went down to 1833.25. My suspicion it's going to rally, and it could rally to 1841, which is the 9-period exponential moving average. If that happens, it's just going to go into a sideways trading range, a kind of a waiting mood. It could even maybe go 1.5 lower. And I'd say today for my subscribers, 1833, 1831, and 1829 are the levels to be watching on the downside. Certainly a break below that is something completely different. So I'm expecting that most of the damage for the day is done. Now, I could be completely wrong about that because we're really a very news-sensitive moment. Here's my concern, Lou. I've got this because this Chapman wave trend gauge is flashing, it kind of has accomplished what it needs to accomplish technically. But what if there's a vote on Sunday over in the Ukraine, and out of the blue, it's perceived as being good? Well, we could gap up really quickly because at this particular level, a number of the 120-minute charts are in a region where the unbalanced volume is in the overbought, the oversold territory, as opposed to the stochastic, which is in the very negative territory, and that would give me a clue. You can even see it here on the 120-minute chart. Look how sharply the unbalanced volume has declined, and the MACD is flattening out, and the histogram, if you're looking at the 120-minute chart, is actually starting to improve. That's a divergence. In a sense, it's a positive divergence. And here's the other thing. You know, I've done a lot of work with I call them climactic high volume lows. Steve did a very nice paper on kind of the proof of this in the number of charts that he looked at. But I discussed this. I've done this for years and years, and that says that if there is a high volume climactic low, you've got to be careful because sometimes it could be a bounce before that low gets retested, and that bounce could last 28 to 52 bars. That could take us into next week. So I'm just going to suggest that the best move has been done, and absolutely there could be further declines to come. I suspect there will be, but I'm also anticipating there's a bit of a bounce that's going to come first. The VIX will pull back as it's already gone in the 120-minute chart to a leg D. It's probably making a peak D as we speak. I'm not sure, but that kind of looks like it might be doing it. It's a trough F, possibly in the 120-minute chart of the Dow. I think the best has been done just for now. I would prefer to wait. And what happens if it gaps down on Sunday night into Monday? Well, all I can say is if you want to take a position with a tight stop, that's fine, but you might not have a chance to get out if we gap up on Sunday night. Because I don't have to tell you, because these things can really move very quickly when there's news from the close on Friday to Sunday evening's opening. So risk is way higher than reward at this particular point. Even if I'm wrong and it goes down, we're at a point where we just don't know what the Sunday night to Monday action will be. So what I'm going to suggest to you, hold off a little bit. And if the E-minis, let me just get back there, are able to climb, it's at 1836. For any reason, if it gets to 1848, 1850, that's the area. 1847 to 1850, that's the area I'd say, okay, start thinking about maybe putting on a short. But at this point, the risk-reward is just a little too great, especially when you have there's no means of actually putting in a stop because, or selling it, because if it gaps up on Sunday, it's already done the job. Now you're stuck with maybe a 9-point or a 10-point gap up. I don't want you to do that. I'd rather risk not making money than risk that kind of risk. So, Lou, I'm going to advise you not, maybe by Tuesday or Wednesday, we'll be seeing a bounce, and then we could talk about maybe that's the opportunity to short at that point. So I hope that helps you, Lou.
Yes, it does. Thank you.
Thank you so much for calling. I appreciate it. Let's go to Mike in Ormond Beach, Florida. Hi, Mike. How are you?
Great, Basil. I haven't spoken to you in a while. I'd just like you to confirm where we are in the longer-term monthly charts. I thought in the Dow that we had made and confirmed a peak D.
Correct.
And correct me if I'm wrong, but the S&P and the NASDAQ, I wasn't sure where you confirm that we are at this point?
Now, it's a great question, because the Dow has made a peak D. The Dow Diamonds has made a peak E, just by a fraction, but it's an E. The S&P is in leg D, and the Qs are in leg E with, let me just do this right now, lift it up a little bit, 90.96, 91.36 with a fractional new high this month, so it's leg E. So now, your big question is, and I remember this is a question that always sits on my mind, and you're kind of the lead questioner about it. And the question is, I'm busy at work. I don't have time to do all the kind of studies and everything. Yeah. I've been relying a lot on the fact that in the Chapman wave, when you get to a D, you've got to be a little bit careful, but you can go on to E and F. We've done it before. We did it before going into the October, going into the 2011 high in the Qs. Is this a time to lighten up, or is it a time just to sit still, maybe not add, but not lighten up, and sit still expecting higher highs? So now let me go through this, because I've spent a lot of time over the last few days. I was hoping you'd call in on Friday, because I've been thinking a lot about how to answer your question. And this is the way I'm going to answer it. If you're in mutual funds, my outlook is still that I believe we're going to go to higher highs.
Okay.
And that means that if we're going to have a sharp pullback, we've already started a sharp pullback. You've got to be thinking in terms of rotation.
Right.
So it depends on what sectors you're in. But this is the way I would look at it. I don't know how you're able to get in and out of your different, if you have different funds or the stocks or anything. Yeah. But I'm going to recommend that at this particular point, it would not hurt either to lighten up a little bit. Now, that would say to me, for every, say, 10,000 one has saved, you can take off 1,000. Why? Because this is a great time to start building up a cash position for putting that back later on. I don't know when the later on is. I'm getting a lot of clues, but those are only clues. I have the the information to say definitively. But at the same time, I don't think that this is a time to get completely out of anything, and I'm not even sure it's a time to get out of 50% if you are a long-term investor. And now I have to put the stuff in the forefront that I like to talk about in my macro view. This is the socio-political, economic, market view. I still believe that the public will be getting in much bigger proportions, and it could go on for, even if we have a very sharp correction, this turns out to be a double-digit correction as opposed just to a little minor pullback. I'm suspecting that we will get, through this rotational correction, we will start another move to the upside, which could go into the October period. I just don't know. I'm just kind of talking out loud.
I know you can only take it step by step.
Right.
And
so I don't know if you've done any lightening up at this particular point, and there might even be a way of saying to you, you know what, if you've built up any cash position at all in the interim, then you could include that cash position into whatever you pull off from the top now. And you want to take a little bit off, maybe a little bit off each fund that you have. But no, I'm saying maybe 10% off. I think that's prudent. Why?
Right.
Because I think there's going to be a wonderful buying opportunity in some of the sectors that are really strong but are going to be pulled back by the market.
Right.
So even if the market goes higher now, it doesn't matter because you'll have time to put that money back. And we're going to have to see now how bonds work out, how gold works out. There'll be ways of putting that money to work. So that's all I'm saying. It's not a bad idea right now to raise a bit of cash. Right. And to me, that's the best way. If you're a long-term buy and holder, I still think that that's the position to have. But this is the time right now. If the monthly charts are going to say, could be a deeper pullback, could be more than just 3 weeks or 5 weeks or 6 weeks. I just don't know yet. I'm getting signs that that's a possibility.
Okay.
But I'm just going to say to you, I would think of taking a little bit off just to raise some cash because it's part of money management because we've had a spectacular run. So I keep thinking of you in those calls and I say, what can I advise that doesn't just jump the gun and say, hey, get out of everything. Then what do you do if we go higher? But at the same time, it says, what if we have a deeper pullback? I'd like you to have some cash to be able to put back because I do believe we will go to higher highs, but it might take a little while before we do it.
Mm-hmm. Yeah, so that was my main question. That I haven't talked to you in a while, and I just wanted to know if you still thought that we would possibly go to a peak E and an F in the monthly charts.
I think so, because those monthly charts, if you're looking at my MACD and the slow stochastic right now, it would be imprudent of me to say that these monthly charts could come crashing down from 93% to 77% in the stochastic, and the MACD will cross negative. But I am getting signs that say shorter term to intermediate term, be careful, because I think there will be a pullback, say in the S&P, to at least test the 1766 level if we take out this week's lows early next week.
Okay.
So I hope that helps you.
It sure does, Basil. I appreciate all the work that you do and everything, and I thank God every day I've got a great job, and I spend a lot of time there, but on the other hand, I'd like to be able to have free time so I could study all your methods.
Well, hopefully that'll work out, but in the meantime, you enjoy your job. That's the most important thing. And as far as the market is concerned, that's where you're building up this kitty to allow you someday to be able to retire or do whatever you want. So, Mike, I hope that works out, and thanks so much for calling.
Sure, thanks for all your help and all your guidance, Basil. You're great. Thank you. Bye.
Thank you very much. I appreciate that. That's Mike in Ormond Beach. We're looking at the Dow. We're looking at the market, and I do believe we will go to higher highs, but we've got to be real careful in this particular stage, and it is, I think, time just to raise some cash. There's nothing wrong with it. Let's go to Warren in Denver. Warren, how are you?
Hi, Basil. How's it going today?
Very well, thank you.
Great show.
Thank you.
I'm looking at CEQP. I wanted to know if you thought it was in a B or a C leg.
A, B, C, D. Let me just do this.
Okay.
I said that, but I always have to pull the chart back. Oh, you see, you've got to pull the chart back to the lowest, most identifiable low in the Chapman wave. So you've got A to B, and that becomes a B minus because it restarts, and it starts right there, and it goes A, B, and I get the same conclusion. So this is it. If you can see the chart, I'm looking at CEQP, Crestwood Equity Partners. I guess is this a REIT?
No, it's an oil company that moves stuff around through pipes. It's a pipe company.
So let's look at this. 1183 was the low on the 23rd of December. It goes to peak A to peak B, and then fails at 1422 on the 3rd of January. It comes down and restarts. I put an X right there. That's the lowest low. And there's a little variation to this technique that I teach in my Master Trader series. But in the meantime, let me just say, then it follows with an A at 1350 on the 3rd of Feb. Parallel highs, so then B is 1373 on the 25th, 27th is 1385, that's C. It's making a peak, a D today, sitting right on the 200-period exponential moving average. Give me a moment because there's a cup formation in the weekly that I need to talk about. So, Warren, if you can hold on.
No problem, Basil.
Okay, great. We've got Warren holding on, and we've got John in Philly. If he can hold on, we'll talk about the NDX weekly if it's possible. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, listen to Nico and Paige. Just a wonderful show on health, and this program all the way through today through Tom's show at 4 o'clock to 6, and just here at TFNN. Now, we've got Warren online from Denver. We're looking at CEQP. And that is Crestwood Equity Partners. They're involved in the oil industry. Now, this is something that's very important. The cup formation in the weekly, it was an IPO, and then it dropped to its low, all-time low, back in, was that September? Back in December at 1183. Now it's 2 points higher in leg B in the weekly, but it's gone before to an ABC and then pulled back. So that's the characteristic. Now, there are 2 patterns I can look at here. One is the oval pattern, but upside down, which says be careful. It could make the neck part of it going below the 1183 low. But the other says, wait a minute, it's holding the 9-period moving average. This week's been quite poor in the market, yet it's holding very well. So do you have a position in this?
No, but I've been watching it for a long time, ever since it went public, Basil, because these pipeline companies, they generate a lot of income.
They do. And my suggestion here is that it's at 14. I would either give it 2 to 3 days by Tuesday or Wednesday of next week. See if it holds 1365, which is the 9-period moving average. If it's holding above that, I'd nibble. All I do is nibble. Why? Because it's absolutely trying to find a base. It's got very powerful candles to the upside and a couple of ugly candles, to one particularly ugly candle on the 6th of December to the downside. But mostly it is trying to find support by the green candles. MACD's turning up, stochastic's turning up. In fact, I'm going to make another suggestion. I'm going to say at $14 right now, I'd start a position, 20 shares, 10 shares, 5 shares, to really get a feel intraday on how it's acting with the market, with oil, whatever oil's going to do. And that's a good way to do it. And that one, I'd give it a whole 1.25 points. I'd give it to the low of 13.04 as a stop, because it's really a feeler position. If it doesn't even get there by Wednesday of next week, but in fact it's holding beautifully, I'm going to suggest you've got your eye on the prize, that it's slowly building a base, and you've got to treat it as a slow buy and hold, and you only add on each step to the upside that holds for about a week and a half. Each time, like a stair-step move. That's the way I would treat it. So a little nibble here at 14, only to have it as a pilot light test case. And if it's holding really well, you can start to add. And remind me again, maybe next week sometime we can talk about it.
Okay, thanks a lot, Basil. Good weekend.
Thank you very much. Thank you for calling. We've got John, if John is still there. Hi, John, you there?
Basil, I am.
Yes.
I would like to, if we run out of time, feel no need to rush through it, please. We'll just... We'll run to the end.
Okay.
And
the question
if it runs
is?
Out, just stop there. The NDX Weekly is my question, but before you address that, first, this is a sincere compliment to you. Your analysis, of course, you always have a frame of mind and a view fundamentally of where things are headed. But when you go and execute trades, your discipline of looking at just your indicators and blocking out the news of the day, Basil, I have to tell you, it is invaluable, because it is so easy to get distracted by the confusing news of the day that you can run into paralysis in trading. So thank you so much. Now to the NDX Weekly. Basil,
yes.
NDX Weekly low, the cash market, made a precise low at the 9-week exponential moving average. What do you make of this, please?
Okay, so I have right in front of me, for those of you looking at Tiger TV, before we run out of time, I've expanded it, and what I've got is there was an instant restart, a Chapman Wave instant restart right there in October, and because of it, it has gone to a leg D. If the NDX 100, I've got 3 indicators that say that there should be a pullback. If the NDX 100 goes under 3,600, it's at 3,653, that to me would start a sell signal in the weekly chart. Hope that helps, John. Stay tuned, folks, and go to the front page for my special
webinar. The
webinar.
Technology Insider is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.